හරි සර් මම සර්ව හොස් කරා දැන් සර්ට මේ පුළුවන් ෂෙයා කරගන්න.
මගේ ස්ක්‍රීන් එක පේනවද?
නෑ තාම නෑ සර්.
දැන් හරිනේ.
හරි සර් දැන් පේනවා.
ඔක්කොම හරිනේ.
දැන් මේ දැන් ස්ක්‍රීන් එක පේනවා සර්.
මාව පේනවද?
ඔව් සර්වත් පේනවා.
හරි. හරි නේද? දැන් මේ පටන් ගන්න ඕනවද කියන්න ඈ?
හරි සර් අපි 12:05 වගේ වෙනකොට පටන් ගමු. තාම කට්ටිය ලොග් වෙන ගමන්නේ.
හරි. right. Thank you. Good afternoon to all of you. Hope you all can hear me well and see me well.
Yes, sir.
Right.
Yes.
Thank you very much. I think others are also connecting. I will just introduce myself just to start with. I'm Dr. Niroshan Seneviratne, currently attached to Hatton National Bank. For the last 11 years, I have been with Hatton National Bank, heading the internal audit function at Hatton National Bank. So currently, I am the secretary to the board audit committee, and for the last 11 years, I have been operating like that. So today, our session is on corporate governance and specifically focusing on how the subcommittees are being managed, right? I hope that you all have covered corporate governance, the practices throughout your session. Am I right? Yeah, please feel free to talk because otherwise I prefer classroom sessions. Since you all requested an online session, I'm just looking at my screen and talking, right? So please connect and make this a discussion because I count more than 35 years in the industry. So please make me talk by asking questions, right? So there are certain things I also need to learn. So that's it. And my background is I'm a chartered accountant and also a lawyer and holding a PhD in economics. So let's start with that. Is my understanding right about you all have covered corporate governance? You all have covered corporate governance?
Yes, lastly we talk about the subcommittees, audit committees like this.
Okay. So what are the anybody can answer? What are the mandatory committees under corporate governance? Audit committee is one. Huh? Audit committee is one. Any other committee?
Nomination committee.
Nomination committee, very good. Others, please join. Please help your friend.
Remuneration.
RPT, yes, very good. One other.
Remuneration committee. Remuneration committee.
Remuneration committee, yes, remuneration committee. What else? Okay, what is corporate governance, by the way? What is corporate governance? I'm just trying to understand where we stand. Then we can explain to what level that we need to get down. What is corporate governance?
The way company are directed?
The way the way the companies are governed, or the way the companies are directed and managed, right? Why is that? Companies, there are a lot of guidance in how to manage companies. The CEOs and the chairman, don't you think that they have enough background to manage them?
So I think agency theory
comes in.
applicable because owners are separate party and the managers are separate party.
Right.
We need the corporate governance to ensure that management is direct the company that
Very good. Very good. Very good. Who's the principal and who's the agent? Agency. Yes. Very good point.
Investors are the owners, agents are the directors.
Agents are the directors. Right. If there is a subsidiary company, now there is a holding company and a subsidiary company, there are shareholders of a subsidiary company. Okay. So ABC company is the holding company, XYZ company is the subsidiary. There are shareholders and directors of subsidiary company. Right. So what is the duty of the directors of the subsidiary company? Is it to protect the subsidiary company XYZ or to protect the parent company ABC? Is the question clear?
Yes, I think protect the rights of ABC company.
ABC is
Parent company.
ABC is the parent company.
Yeah.
So should the directors protect ABC or XYZ?
Which
Huh?
company directors? Is it parent company's directors or sub company directors?
No. XYZ is the subsidiary. Subsidiary has directors. Subsidiary directors, what is the interest of subsidiary director? To protect the subsidiary or the parent company?
Subsidiary.
Subsidiary. Right. Good. Thank you very much for answering and giving some inputs. Let's work in that line. I will take today's presentation. Stop me at any point. I like this kind of discussion to proceed with. So let's move on in that line. Okay. Right. Can you all see my slide?
Yes, it is visible.
Visible. Okay, no? Right. So we'll be covering corporate governance and the board committees and the practices that we have. So the legal framework, if you really see the legal framework governing corporate governance, can you all just explain to me what is the legal framework? Who is telling us to practice corporate governance?
Company Act.
Companies Act.
Yeah.
2007?
Yes, 2007 and number 7. Yes.
Number 7,
2007. Yes, that act.
Is there amendment?
We do have amendment, I think, in the last year. I don't recall.
Right, good. Very good. Right. Any other? Any other statutory requirement? Now, all this time you learn corporate governance in the US and UK. Those are comply or explain, right? That is what you learned, no? Comply or explain. Either you comply, if you do not comply, please explain. Right? Those are guidelines. Those are governance practices. But the moment there are acts or legal framework that tells you to do something, we have to do, right? So the Companies Act comes and says that we have to do certain things. Then also the SEC, Securities and Exchange Commission Act, CSE rules. Then the Central Bank Act and the Central Bank rules comes and says that these are mandatory requirements that we need to comply with. So that is why it is very, very strong. If you do not comply with, you will be violating the regulatory framework and you can be prosecuted for violations. Understand? Right. So when you say governance, my first question was that what is governance? So governance, the interpretation of governance is the act or process of governing or overseeing a control and direction of something. That is in general what is governance, right? So before we go into corporate governance, there are multiple governance that you can hear when you listen to certain day-to-day activities. Then public sector governance, right? So that is to manage the public sector. Agency governance, how do we manage the agencies? Legal governance, how do we govern the legal process? Enterprise governance, right? Then democratic governance, good governance, corporate governance, environmental governance, e-governance, global governance. There are multiple SOE governance, right? Family businesses also need to govern, right? There are big family businesses. They also have board of directors, not up to the level of public companies, but they also need governance, right? SME governance. So multiple governance areas that we have. Do we have governance for the public sector? What do you think? I think some of you all are from the public sector. Do we have public sector governance? State governance? As a country, do we have governance? Do we have a governance framework? Is it only applicable to the companies or the corporates? Right? What do you think? Do we have?
Yes, we have.
We have. Can you give me some examples of governance in the state?
Andukama Vyavastha.
Under?
Andukama Vyavastha.
Anukam Vyavastha. Okay, right. That's governance. That's a broader governance framework. What else?
Criminal Act.
Very good. Very good. Well read. Very good. Huh? So where does that requirement comes from? Criminal Act. Change in the Criminal Act. Huh?
From English law?
From the ministry.
He said English law.
No, I'm not referring to details of criminal justice. I'm just asking. Now, see, our country was in a bad situation economically. So we were struggling. Then we went for support from the World Bank and the IMF. Then when they came here, they realized that the governance structure of the country was not right. So a lot of corruption, right? You know what I'm talking of. So therefore, they came and they gave a guideline on certain areas. They gave us 16 items that they wanted the governance to cover, right? Public governance. So you can see my slide. The IMF 16-point plan, a blueprint for Sri Lanka's revival, and essential steps towards transparency, accountability, and public governance, right? This is the heading that they gave. We need transparency in companies as well as in the state or the government. Then accountability in the companies or the corporates as well as in the public sector, and public governance. So these are the 16 points that they gave, right? Just for your information, I will just talk about few of them, because governance, the point that I am raising here is governance is not only limited to corporates. Okay, so first governance point that they gave, establishing an advisory committee by November 2020 to nominate commissioners for the commission to investigate, that is CIABOC, right? Bribery and Corruption Committee. And they wanted to appoint a very, very clean person to head the Bribery and Corruption Committee, right? So in terms of appointing them, that arrangement, I would say we are complied with, right? Publishing asset declaration for senior officials by July 2024. These were the targets that were given, but we were not able to meet the target at that time. But reasonably, we have complied now. You may have seen that the public officials have published these, and some of you all are public officials. You all also would have asked to publish those very, very responsibly, right? Accountability and responsibility, transparency, all those need to go in that, right? If nobody is verifying those, if it is not published in the websites and public can see, you can submit anything. Now it is not like that. You need to really publish those with accountability. There were a lot of discussions about some of the ministers having assets, right? So that is because they were obliged to publish those, and the public, you and I, can go and verify that. However, the CIABOC has the authority. They can see who viewed it, who accessed it, for what purpose, right? So individual logins are being captured. Now, number 3, enacting proceeds of criminal legislation by April 2024 to align with international standard combating money laundering. So we are partially complied, not fully complied. The law is being discussed. Then the amending National Audit Act. This was done. Bill was passed in August 2025. Operationalizing is what is working now. Auditor General will have more powers coming under National Audit Act, right? Finalizing and implementing regulations for beneficial ownership information. What is beneficial ownership? This is a new regulation that is coming in. That is the Companies Act amendment that was passed very recently. Speak has signed, I think 2 weeks ago. Now it is law, but the implementation is lacking now. It's a requirement that are coming from the new act. Beneficial owner. Who is the beneficial owner? If you are registering a company, you need to declare who is the beneficial owner of this company. Have you read about beneficial ownership? If you all need any explanation, just
Yes,
raise
sir.
your voice.
Yes, sir. Please.
You all know it, right? You need explanation.
We need explanation, sir.
Right. Okay. Now, from my screen, I can't see if you message me, right? Just unmute and tell me any language. You can use any language. Tamil, I can't understand. So you can raise your voice, huh? So because my screen, I can't see whatever you will be typing, right? Beneficial owner. The new act, the Companies Act, comes with this requirement because of that IMF requirement. That is the reason when you are registering a company, you need to tell the beneficial owner who have to be a human person, right? So the company will say, I'm going to register ABC company. Who are my beneficial owners? All this time they were saying XYZ company, right, of Singapore, right? So we go to that extent only, and this company is owned by Singapore XYZ company, right? Now, under this law, they have to declare who owns XYZ company in Singapore. They will say PQR company in Malaysia. Okay. Then they have to go another line, drill down, and who owns PQR company. Like that, they will go maybe 20, 30 lines, and finally they have to say Mr. ABC is the owner. Is it clear? If they don't disclose, this company will not be registered. Are you
Yes,
clear?
it is clear, sir. It is very clear, sir.
Right. So that need to be declared. This is a requirement coming under IMF this thing. So we are complied to a certain extent. The act is passed. That is the reason for the amendment of that. Right. So you must be wondering why all these acts are getting amended within this year suddenly. So these are the somebody need to push for governance for longer periods. Those have been just being postponed. Beneficial ownership is that enacting public procurement law by December 22. This is the date that they have given. We are working on that procurement. If there is a procurement, some of you all may be already involved in that. There has to be a tender procedure. How does it work? Then emergency purchases, CEB and all these institutions, there are, they're derouting from the main line, saying that these are emergency purchases. Emergency purchase provisions will allow you to bypass the standard transparent way of evaluating bidders. Okay, so those partially complied. Publishing reports on increasing competitive tender procedure is required. Requiring the publication of all public procurement contracts over 1 billion. If the contract is over 1 billion, those need to declare publicly available, right? Implementing state-owned SOEs, state-owned enterprises reform policy, right? Now that is why the CEB, there is issue as it is now. So you must be wondering why suddenly why into 4 companies and asking state-owned the CEB staff to join these private companies. These are coming from these background requirements, right? Abolishing or suspending the strategic development project office. So that is also one. Even the ICTA agency will be abolished. Amending tax legislations, right? That is again work in progress, right? There will be multiple tax revenue related improvements. You can't evade tax. Even now, are you all paying taxes? Are you all paying taxes?
Yes.
When is the date for filing the returns? All accountants, right?
November 30th.
November 30th. Okay. So how many of you all have published or rather filed your this thing, right? So when you're filing, have you all gone into the website, in the revenue site? All online, right? You need to file your returns online. If you go into the site, you will see earlier if you are paying advanced personal tax, that is pay tax. Earlier you can only file the T10 and get out of it, right? Now, if you have deposits elsewhere in banks, those banks, whatever the interest that you get is taxed at what rate? If you have a deposit in a bank, your interest is taxed
10% withholding tax.
withholding tax 10%. Earlier it was 5%, right? So banks are submitting these details on a regular basis to Indian Revenue Department, meaning Mr. A. Pereira, we had a deposit and we have paid interest to the value of 200,000 and we have withheld 10% of Mr. A. Pereira NIC number, TIN number with that. So when that information goes to Indian Revenue Department, they upload that file. So Mr. A. Pereira, when he tries to file his return, automatically it pops up that there's withholding tax of 20%, 10%, right? You have paid withholding tax of 20,000. Then you have to declare your interest income of 100%. Understand? Is it clear?
Yes, sir. Clear.
Is it good or bad?
But we can deduct that withholding tax penalty when we.
Exactly. We can deduct that. But now when it is automated, things will move in the right direction. So these are the requirements that the IMF is getting at, right? So this will be further strengthened with everybody coming into one NIC number, right? Digital NIC. So that's a major work assignment that is being done in digitalizing all those operations, right? So with your NIC, if you have sold a vehicle, if you have registered a vehicle, all those information will be coming under IRD. Everything is linked, so you cannot avoid paying taxes. Earlier, roughly about 30 to 40% of the people in the country paid taxes, whereas most of them escaped the tax net, right? That is why we were struggling with lower revenue in the country, right? What is our total revenue of the country? All of you are accountants. What is the total revenue of the country? Any idea? No one knows? Billions or trillions? I think ChatGPT will help you. Right? I will leave it for you to find it. Okay. It's about 4 to 5 trillion rupees. Okay. So when revenue is 4 to 5 trillion rupees, what is your expenditure of the government? Is it less than 5 trillion or more than 5 trillion?
7.
Yes, more than, yeah, correct. More than what we collect. Come again? Right. So when you have like that, then obviously we have a budget deficit or the revenue deficit. So this is what we have been going and borrowing for the last 30, 40 years. We have been doing that. Not only past few governments, but it was the case. Why? Our revenue targets were not achieved. So that is why these requirements coming in public governance. So corporate governance, we have heard enough. We need to understand what is public governance also, right? Right. Yeah, banking sector, the banking sector, that is item 14, revising legislations, regulations, and processes for stronger oversight in the banking sector. So the Banking Act was changed, then the Central Bank Act was changed. They're strengthening all those because of these requirements coming in. In a way, these are good. But we need to be independent also. Country need to be independent also, rather than wait until somebody holding us, saying that, okay, we will give this money if you comply with those, right? We need to be mindful of that, right? So that's about public governance. Now we will move on to our area, that's corporate governance, right? As you all rightly said, you all know corporate governance is a system by which corporations are directed and controlled in the interest of shareholders and other stakeholders. Now, who are these other stakeholders? Shareholders, we know. Who are the other stakeholders?
Lenders.
Lenders, okay. Who are the lenders? IMF.
For the government, IMF.
Okay, right. Lenders to the company, the bankers, right? Who else? Come on, everyone, speak. This is not a undergraduate course, right? Masters.
Related
Only
parties. Related
Huh?
parties. Related parties.
Related parties, okay.
Then the
I hear only one voice. Creditors, debtors, staff, right? Borrowers, all these guys are coming captured under stakeholders. We need to really understand where the corporate governance rules come from. Investors, right? So you heard about the background to corporate governance, right? What is the background to corporate governance in the world? Why did corporate governance come into surface? It's a fundamental question. You don't know?
Because of the
You-
corporate failure.
Corporate failures, yes. What are the companies that failed? Famous companies. Adagane? Right, okay. We'll continue. Golden key. No, I'm not referring to Sri Lankan context. World. What happened?
Enron.
Good. Enron, then? You will just have a book knowledge only, right? I'm just advising you. You try to, because information is available. Unlike our days, information is everything is available. Even if you type this question in ChatGPT or any AI tool, they will give you information, right? Read about it, right? Now, somebody said Enron. Good, very good. What business they were in, Enron? I think exam is next 2 weeks. Is it? Right. Okay. So I will stick to my presentation. So you all are reluctant to answer. So additional things will not be discussed. Okay. Right. So corporate governance is a complex affair. Right. I'm giving a different perspective to corporate governance. It's about purpose of corporate governance, people, processes, and performance. Right. When you say purpose of corporate governance, that is why, who, how, what questions that you need to answer. Very, very simple when you have these type of questions. Why the organization exists and whom it serves for. So that's your mission, vision, right? policies, practices, all that comes in there about the company, about the corporate. Then who governs and who is governed? Who is being governed? Who governs? Board of directors are governing us, right? And who is governed? Who is being governed? The management is being governed, right? That's about the people factor. How governance is structured and enforced. How does the governance structured and enforced? That is the process. How does it ensure? So we'll be discussing about that, right? The right committees have to be there, the processes have to be there, the policies have to be there, right? Internal controls have to be there, right? So those are the processes that will make sure that the organization is governed in the right way, right? So when you have these three, the purpose, the people, and the process, the performance will be a very, very smooth operation in the company that will achieve the objectives and the goals of the company very, very simply, right? Right. Let's keep this slide. Right. The conflict comes in, right? Now, if you take the left-hand side, you have the shareholders, you have the directors. Shareholder is the principal, director is the agent, as you all rightly said. Now, this is the vertical connection, right? The leftmost corner, right? Shareholder to down agents, shareholder and director. Now, on the right, horizontal relationship, the controlling shareholder, right? Answering my first question, that is, controlling shareholder is the principal. And the shareholders of the subsidiary, right, could be an agent. Through them, the directors of the subsidiary could be the agents. So principal is not directly the shareholders of the subsidiary, but it could be the shareholders of parent company. So in other words, the directors of subsidiary company need to work towards the expectation of the parent company. Is it clear?
Yes, sir.
Right. Right. So corporate governance, why? Conflict of interest between principal and agent. There are two cases. The agency problem can be horizontal between the controlling owners and the minority shareholders. It could be horizontal, or vertical between the directors and the shareholders. So we have, if I take HNB as an example, we have about 20,000 shareholders. 20,000 shareholders, right? All those shareholders cannot manage the bank. They may be interested in managing the bank, but it's impossible. So therefore, they will appoint their agents. Who are they?
Chairman and director board.
Director board, right? So we have about 13 directors, right? Appointed by the shareholders, right? And when those shareholders are appointed by the shareholders, when the directors are appointed by the shareholders, there is a vetting process that goes through. Which committee will vet the names suggested by the shareholders to come onto the board of HNB? Which committee will vet this or approve it? Which committee?
Nomination committee.
Nomination committee. So when the names are being suggested, the nomination committee will have to clear these names. Then only shareholders will say, okay, we are in favor of Mr. So-and-so being appointed at the annual general meeting. Is it clear? That is how the process works, right? So the principal and the agent, objectives of the principal and the objectives of the agents are slightly different. Right? If I have invested money in Hatton National Bank in shares as a shareholder, right? That is, shareholder is the principal. I am the principal. Agent is the director that was appointed, right? shareholders are interested in. I'm as a shareholder of Hatton National Bank, my interests are return for my investment, right? A good return for my investment. I want the company to continue and give me dividends for the rest of my, as far as I keep these shares with me. So shareholders are interested in return on investment, longer term profits, sustainability of the bank, all that, right? Whereas the agent, the director's responsibility is slightly different. Director is the agent. Directors are interested in business growth, right? Acquisitions, short-term profits. They want to make profits and exit. Okay. So this is where the conflict comes in. I, as the shareholder, I have appointed this number of directors to work for me, but their interests are different. They want to go and acquire other businesses, right? Okay, is it clear? Right?
Yes.
Yeah, you all mentioned about Enron earlier, right? You all mentioned about, you didn't mention that. I will come to that. You know what happened to Enron? What happened to WorldCom, right? Their strategies were acquisition, right? Because directors wanted to expand. They wanted to come into Fortune 500 list. They were in that Fortune 500 list. Through what? Through acquiring other businesses. Okay. So they were into telecommunication, right? They wanted to acquire businesses. So they went ahead and acquired, where the shareholders, they wanted a decent return for their investment. So they went acquiring organizations. The theoretical expectation of, 1 + 1 is 3, the synergies, when you acquire business, you will not see the synergies that we expect. Those are theoretical facts, because I have gone through one of the acquisitions in a different bank, but it is really, really difficult, because you are acquiring another bank, that bank or another company, that bank or the company will have different systems, different cultures. The culture mismatch is the main problem that we see in mergers and acquisitions, right? Systems, right? The co-banking system or company systems will not go in hand with other companies thinking, right? So we have to be mindful when there are acquisitions, business acquisitions. There will be multiple issues that they need to, their growth will be, size will be there, but the real performance and the growth will be affected. So this is the agency principle or agency problem in corporate governance or companies. Okay, right. By the way, how is an agency being created? How can an agent be created in the agency law?
In written.
In written by agreement. Very good. What else? How else? If I am the principal, how can I appoint an agent according to law? By an agreement, I can appoint ABC as my agent. How else? Huh?
Well,
I didn't hear. Any other way? Right. Law recognize certain other ways of doing agent.
මොකද
I think you have to mute your line. You have to mute your line.
අදට නම් බැරි වේ මම අර ඔඩිට් එකක් දාගත්තනේ කම්පැනි එක විතරයි තියෙන්නේ ස්ථාවර එකක් මොනවත් නැහැ ඒක පස්නා ඉස්සරට ගියා
Who is
වෙන
American?
එහෙම යන කෙනෙක් කියන්නේ මේ ඇක්ටිං කෙනෙක් නැද්ද අයියා?
නම්ගේ එපි කවුද ඉන්නේ කියලා මට මතකත් නැහැ මම හිතන්නේ මතකත් නැහැ
Jessica mute you.
ඇයි?
හෙලෝ
හලෝ අයියා?
නම්ගේ මේ මොකද කරන්නේ
Right. So agency can be created through an agreement. You're right. The agency can be created through ratification also. If my agent is acting, right, I have not appointed Mr. X as my agent, but the person is acting like he is being appointed, right? So I have not appointed him officially, but I knew that he is acting and I keep quiet, right? That's the case, Kellner versus Baxter, very old case. That is where they said the agent is being appointed under the law. Then the estoppel is also something like that. By necessity also, you can appoint a agent. Okay, so that is how the agency law works. Then these are the main companies that that fell somewhere in early 1990s. WorldCom, Enron, right? Barings Bank, right? This is about the WorldCom story, how this WorldCom collapsed. WorldCom was the United States' second largest long distance telephone company, right? WorldCom grew largely by acquiring other telecommunication companies, most notably MCI Communications, acquisitions. Their strategy was acquisition, right? That is the interest of the directors to acquire other businesses, right? So shareholders' expectation is just to get a return on their investment, but directors, they wanted to grow this business and why? The fraud was accomplished primarily in two ways: booking line cost, interconnection expenses, right? These are revenue expenditure that they capitalized and showed this, because the moment they charge those, your profitability will be lower, and the shareholders will start questioning why our profitabilities are low and our dividends are low. So therefore, what they did, they capitalized these expenses, massive expenses, in that company. So that is where the directors hid their inefficiencies in that company. So this was exposed and the company collapsed later on, and the shareholders went and sued the company as well as the auditors. Auditors were Arthur Andersen, and they were also found responsible for the failure. They have given opinion saying that everything is perfect. You all said Enron, right? America's most innovative company, employed about 20,000 employees. In 2001, Enron, again, very similar. They were hiding information in that. There again, Arthur Andersen was part of the game, right? So Arthur Andersen was prohibited from performing audit work because of that. These were the American law came in for corporate governance, the Sarbanes and Oxley Act. These were studied by two lawyers, Sarbanes and Oxley. They gave recommendations, all those recommendations compiled into law, and they issued Sarbanes and Oxley Act for the compliance of the corporates. That is the corporate governance background in the US. in the UK, there were multiple companies and banks collapsed, right? BCCI, Bank of Commerce, Credit and International. We had a branch in Sri Lanka also. They had a branch in Sri Lanka also in 1990s. That was also closed down. Then the Barings Bank, Polypec, all these companies collapsed in UK as well. Earlier story was about UK. After studying, they introduced law to govern corporates. Corporate governance came in as a Sarbanes-Oxley Act. In the in the UK, the Barings Bank. What happened in Barings Bank? Anybody? Barings Bank? Reason for the collapse? This bank was about 135 years old, right? One of the best banks at that time. Barings family owned it. How many years do you think HNB is old? HNB is how many years in the banking business? Any idea? HNB is also 135 years old. Okay. Yeah. What happened in Barings Bank? The dealer called Nick Leeson, right? He invested in some futures and he was keeping an open position and hiding all the losses into 58 account. That's 555 account. That was a suspense account. He was hiding all those losses in that suspense account, and this got exposed, and the losses were multi-billion. So as a result, the entire bank went out of business in 1995. Then there were multiple committees that were introduced to study the corporate collapses in UK. Cadbury, you may have heard of all those who have studied. Greenberry, Campbell, Hempel, Higgs, Turnbull reports, right? Then the combined code of corporate governance that came into practice. So you know the background. So I will skip this slide. Any explanation you need up to now? All clear? Are you all with me?
Yes, sir.
Everyone got muted? No? Right. So this is the order: Cadbury, Greenberry, Hempel, Turnbull, Smith, Higgs report 2003 onwards. So this is how the corporate governance structure came in. The US, the UK structure is a comply or is a principle based, not legal framework, principle based act, comply or explain, right? Now, this is what we adopted into Sri Lanka. It's a principle based set of rules. Okay. So we'll skip this. Right. So basically, the corporate governance rules, right? Listing rules of London Stock Exchange now require each listed company to state its in annual report, comply or explain, right? They have to comply with these requirements. If not, they have to explain, right? So that is a principle-based approach where you will be disclosing in your annual report, okay? These are the set of requirements, right? And we are complying with them, except for item 10, 15, 40, and all those where they will give explanations on that. Right? We also had the same thing, but no more it is like that. We have to comply with those. Otherwise, the Companies Act and all these regulations have come in stronger. The framework is stronger. We can't just explain and exit. We need to be responsible for all those compliances. Right? So basically, they are talking of effectiveness, accountability, remuneration, leadership, shareholder relations, internal controls, board audit committees, and so on and so forth. In 2003 onwards, that was the practice there. And we also adapted through the Chartered Institute corporate governance practices, the code of corporate governance. That's not the act, it's a code of corporate governance. Code is not a legal requirement. Right? So basically, it's, you know what it is, right? The board and the committee should have the appropriate balance of skills, experience, good balance, formal, rigorous, and transparent procedures, allocate sufficient time, board members, induction on joining the board, right? Timely manner with information, right? Board should be supplied with timely manner for them to make decisions, right? Re-election at regular intervals, right? Every year they have to get re-elected. All those are requirements. Accountability. Responsible for determining the nature and extent of the significant risk, maintaining sound risk management and internal control systems. So maintaining sound internal control systems, who is responsible? Internal audit, external audit, shareholders, directors. Question is, maintaining sound internal controls, who is responsible? Management, internal audit, external audit, shareholders, directors.
Internal audit.
Director.
Any other answers? Any other answers?
Yes.
Hmm?
Directors.
Directors.
Direct-
Any other answer? Any
The
other
man-
answers?
The management.
Okay. So I had 5 answers in that, right? The responsibility to maintain internal controls. A, how do I say? Internal audit, management, directors, shareholders. Yeah, 4 answers. External auditors, 5 answers. So you all said internal audit. Somebody said directors. Somebody said management. There are 2 other options. External audit and shareholders. Are they not responsible? Yes or no? External audit and shareholders. Are they responsible for internal controls?
No.
They are not responsible. External auditors.
Shareholders can't control internal controls.
Okay, right. Then they are not responsible. External auditors. External auditors.
auditors are done sample audit, so we can't involve everything. They only mention some errors they identify as a sample.
So therefore, they are not responsible.
They are responsible. No, they are not responsible.
Right, they are not responsible. Hari. Internal audit. Internal auditor?
Internal auditors are responsible because they are the inside the company. So their duty was already identified errors and internal control problems and report to management. So they are responsible.
Okay. Then directors? Others? Help her. On behalf of all of them, all of y'all, he's talking, she's talking. Directors are responsible?
No.
No.
Directors are also responsible because they are the management of the entity.
Then who's the other party? Management. So you agree with what the answers that were given? All of you all.
The management and internal control department is responsible for implementation and implementation process, but ultimately the responsible parties line with that board of directors.
Right? Now this is where the confusion is, right? Corporate governance continuously says, right, in front of you, 1, 2, 3, third bullet point. The board should maintain sound risk management and internal control system. Very clear. The board should. So these are very, very fundamental things in corporate governance, right? If there's a MCQ, most of y'all will, if the answers that y'all gave the right cross section of people here, you will not get answers, marks, right? The fundamental responsibility for the internal controls and risk management is with board of directors. හරිද? මේක හොඳට ඔළුවට ගන්න. මේක ගත්තේ නැහැ කියලා කියන්නේ corporate governance ඔයගොල්ලෝ දැනගෙන නැහැ. Corporate governance, none of y'all have got into your DNA what corporate governance is, right? It's a fundamental question, right? It is about directors that we are talking here. Directors are responsible for internal controls. So they are responsible. Then they will implement internal controls through they will implement internal controls through whom?
Management.
Through the management. Very good. Right? They will be introducing internal controls through the management. What is the responsibility of the internal auditor? Internal auditor, if I say internal auditor is the agent, who is the principal for internal auditor?
Board of directors.
Board of directors. Okay. Internal auditor is reporting to the board of directors. That is the corporate governance structure. So therefore, board of directors have set, right, and directed the management to implement internal controls, right? Internal auditor is an independent party who goes and sees whether the internal controls have been implemented properly, have been practiced properly, right? Have been executed, are they in practice? If not, he is going and telling the board, look here, you wanted internal controls implemented by the management, they have not implemented. Is it clear? Right? So that is how the responsibility comes in. The board of directors are fundamentally responsible to have a sound internal control system, right? And they will be implementing it through the management. Internal audit is the person who will go and verify and go and report back to the board of directors saying that perfectly it is done. There are a few recommendations that we gave that recommendation. They are good. Okay. Your answer on the shareholders is right. Shareholders cannot manage the company. They have invested only. So they are not in the game. Right? So therefore, you need to identify very, very clearly who's responsible. Are the external auditors responsible for internal controls? No. They are a completely outside independent party. They will be coming and verifying internal controls for a different purpose. What is the purpose? Why are external auditors checking internal controls?
Giving the reasonable assurance for the financial statement.
Exactly. So their responsibility is to issue an opinion. If they give a blind opinion, if the internal controls are not sound, anything could have gone wrong. Right? They have to increase their sample sizes. So they will be evaluating internal controls for the soundness. If the internal controls are very sound, they will be comfortable giving their opinion where they will be personally liable for. Is it clear? Meva, hari fundamentals. Right? When you give answers only, I will assess your knowledge. Okay. If you do not answer, if you keep your lines muted, I don't know. I think that you understand everything. So I will be just going through my slides. Understand? Thank you very much for giving that wrong answers. Right. Remuneration, leadership. Right. Right. So corporate governance having introduced, right, in 2001 to onwards, right, in the UK and US, both countries, right, corporate collapses. If you take this chart from left bottom to top, right, 2001, the collapses. Enron 2001, the highlighted ones, the WorldCom 2002, Tyco International, Merrill Lynch 2002, then again down from up, Freddie Mac, AOL, Adelphi, Nortel, AIG, right, 2009. Then again, third column, 2010 onwards up to 2020, right? Corporates are collapsing. In 2016, Toshiba collapsed, Tesco collapsed, right? Olympus Corporation collapsed, right? Wirecard AG collapsed, Wells Fargo collapsed, right? The corporate collapses are continuing, right? They have addressed certain things, but the bleeding is still there, right? So that means corporate governance has not worked as expected. Okay, the corporate governance framework in Sri Lankan context. This is the legislation governing corporate governance in Sri Lanka, right? Companies Act number 7 of 2007. Then the Companies Amendment Act number 12 of 2025, very recent, enacted on 4th August 2025. This is where the beneficial ownership disclosure came in as a requirement. There was one other requirement also, single shareholding company. They were able to register or allowed under this act, you can have a company registered with a single shareholding. Can anybody tell me why the single shareholding came into place? That company, I'm going to register one company called XYZ company. I have only one shareholder in that company. What is the purpose of that? Earlier, you had to have multiple shareholders to register a company. Single shareholder, what is the purpose? Beneficial owner, I explained, right? You know what it is. When a company goes to register, you need to declare who is the final beneficial owner of this company. You can't give names of companies. You need to give one individual's name, person's name. Number 2 they introduce is the single shareholder companies. Any idea why it is? No? Single shareholder companies, previously it was the proprietorship companies. Right? You could be a trader, you are the sole proprietor, right? So you will be operating that. But you want to get rid of this responsibility. If you are a sole proprietor, you are responsible for all the debts, right? So you can register a company as a single shareholder, right? Say for example, Niroshana Seneviratne, he operates a trade business, right? That's I go and register my company as a proprietorship, right? I'm the single proprietor of this. If there are issues coming from, I want to detach from the company. So therefore, there was no provision at that time, previous Companies Act, to register my company as a single ownership company. Now I can go and register my company as a single ownership company. So my company is different, I myself is different, but owned by my own self. Solomon and Solomon, can you remember? There was this case where you segregated or identified company as a different entity. So Niroshana Seneviratne's company has a different name owned by Niroshana Seneviratne. I have my own other activities separately. So that is why it was facilitated in this act. Then we have Securities and Exchange Commission Act of 1987, and based on that, they gave a lot of, based on that legal background, they gave multiple requirements that we need to comply with. So Colombo Stock Exchange, effective date is 1st October 2023 onwards, they gave a list of rules that we need to comply with. Those are compulsory rules coming from backed by the Security Exchange Act. Then the Banking Act regulations, directions given for licensed banks. Banking Act number 5 of 2024. The original Banking Act was changed, and it came into effect from 1st January 2025, and very, very strong legal framework with regard to corporate governance coming from that. And Personal Data Protection Act, this is 2022. Now, from next month onwards, this will be implemented in Sri Lanka. Act is passed in 2022, but the operationalization is happening from next month, probably. This is going to be a very, very serious set of rules where we need to protect the personal data of individuals, right? So say for example, one of you come and open an account in a bank or any other company, right? Even ordering a pizza, right? You give your details. If they ask, sir, can I have your NIC number, right? You have all the right to question why you are asking me for that, my NIC number. That's identified under this act as a personally connected number. Your personal, what do you call, your names, your addresses, residencies, your NIC numbers, all those are only personal to you, your mobile numbers, right? You can say that under PDPA, I'm not supposed to give you this information, right? But if I'm giving this information, you are asking me, but you need to tell me how you're going to protect this information, right? So you are taking a picture of myself, right? When you go to a bank, sometimes when you open an account, they will take a picture, right? So that is only personal to you, right? So you have all the right to ask a bank, right? What are you going to do with this picture? How do you protect this picture? these personal belongings of mine, right? All these need to be very, very carefully managed, right? Under PDPA, all of you all, including myself, we are called data subjects. We are subjects. Then the organization that keeps our data, right? Now, say if you go and ask for a passport office will ask for your NIC, address, marital status, all those information are with them. All your personal information are with them, right? So as a requirement, we have to give all those, right? Now we are data subjects, and passport office is the data controller. So data controller under this act will have to have multiple controls to protect that information, right? So those are rights that we have as public, and also the companies need to be mindful of managing this data in those areas. Anything that you want here on this slide? Right. So we'll have a short break. We'll meet up again at 1:50.
Okay, sir.
Right.
Okay, sir. And sir, can you share this lecture material with us?
Yes, yes. Those everything will be shared.
Oh, thank you so much, sir.
Right. Any other question so far? Right. So we'll stop for 20 minutes. We'll come back. Right. Are we back? Shall we start?
Okay, sir.
Right. Any questions up to now? No? We can go. Continue. Right. So, with regard to the directors, right? I don't think you all have covered this area for Companies Act requirements coming from 2007 Act, the directors, right? Who is a director, right? Definition of a director is given in section 529. We need to understand what the definition is, right? There's a very big definition. In summary, a person occupying the position of director of the company by whatever name called, right? You can call a different name, but as per that, they are going to identify that as a director whose directions or instructions the board of the company may be required to act, and who is entitled to exercise or entitled to control the powers which would be required to be exercised by the board, right? So you have to be mindful of the definition and appointment of a director. So section 201 onwards up to 210, it talks about directors. A company shall have at least one director. So this provision applies to that single shareholder company. He can be the single shareholder in the new act. He could be the director and shareholder of that company, except a public company which should have at least 2 directors. If it's a public company, we need to have 2 directors minimum, right? HNB being a public company, we have 13 directors. 202 of the Companies Act, any person who is not disqualified, as a person who is not disqualified under the Act could be appointed as a director, right? Merely because that people cannot get into directorship of organizations. Those have to be approved by the nominations committee. The following person shall be disqualified from being appointed and holding office as a director of a company. Who are they? A person who is under 18 years of age. You can't be a director. A person who is an undischarged insolvent. A person who is prohibited from being a director. Previous case, he was told that you are not allowed to be a director of any of the companies since today. A person who has been adjudged to be of an unsound mind. A person that is not a natural person. Now, can someone tell me who is a natural person and who is a legal person? What is the difference between two? Natural person and a legal person. Do you see a difference between the two?
Legal person can be another company.
Correct. Very good. Natural person has to be a human, right? In legal context, there are 2 major variations between the two. A person, human person, natural person, you and me are natural person. The legal personality is different. Now, what is the main difference between the two? in terms of the law. In terms of the things that you can do, huh? Now, natural person like you and I can do anything that we want, right? Except for the ones that are restricted by law, right? We can do, you and I can do anything that we want except for what is restricted by law. Right? If it's a punishable act, say for example, attacking a person, killing a person, right? All these are not allowed to perform. Those are violations. So therefore, other than hurting a person, other than attacking a person, right? Other than cheating a person, cheat is a punishable offense, right? Deceiving a person, again, a punishable offense, right? These are all recognized in the penal code, right? Penal code has multiple violations. So other than what is described in the penal code, we can do whatever we want as a natural person. Okay? But a legal person can only do what is given by law. If it's a company, what can the company do? Company can only do what is set in the memorandum of what? Company is formed with the objective of fishing. Company can do only fishing. Where does it say? Come on.
Article of Association.
Yes, Articles of Association and Memorandum of Association, where it says the objective of the company is this. Company can do this. These are the ancillary objectives. These are the things that company can do. Company is formed to do something like that, and the law and the regulation says these are the things that the company can do. Company cannot do other than what is stated. If the company does something other than what is stated in the memorandum, what do you call that? All of you all have learned this. Well, I've forgotten. What do you call? Outside the objectives, if they do. What is the state? What is the name for that? No idea? The company is formed to build railway tracks, right? That's the objective. But the company operates a railway line, a railway transport system. Is it right or wrong?
It should be wrong.
Huh?
It should be wrong.
It is wrong, right? In that case, what is the transaction is called? It's not a valid transaction, right? නමක් කියවනේ ඔකට.
Special transaction.
කියන්නේ මට ඇහුන්නේ නැහැ.
Special transaction.
Special
Or major.
ඇහුන්නේ නැහැ පුතා. ඒකට කියන්නේ ultra virus transaction. හරි. මතකද එහෙම වචනය? Those who have done chartered, those who have done SIMA or whatever exams after A levels, you would have heard that word. Railway company Ashbury Railway gila, there was a case, right? You all need to remember those, because corporate governance comes and connect things from everywhere. Okay, with regard to companies, with regard to directors, with regard to shareholders, right? With regard to employees, with regard to KMPs, key management personnel. So we have to be mindful of that. 203. A person shall not be appointed as a director of a company unless he has consented to do that. Consented to be a director. You need to first get his consent that he would like to be a director, because a lot of responsibilities will be casted upon the directors when they appear in courts as a director of a company. They will say, I never consented. They just appointed me. They asked me, okay, suddenly they appointed me to the board. They can't escape. They have to give that consent form under section 203 of the Companies Act. These you need to really read and understand. These are very, very straightforward provisions. 204, be appointed by ordinary resolution. There has to be ordinary resolution. Other than ordinary resolution, what are the other resolutions?
Special resolution.
Special resolution, correct, very good. So to appoint him, we need to have a ordinary resolution. 206, be removed by ordinary resolution, and the maximum age is 70 years. This is the under the Companies Act, these are the requirements. Okay, so you can't have a director who's 72 years old. It's a Companies Act violation. Right. Then the Companies Act also explains a fiduciary duty. What is fiduciary duty? Right? Fiduciary duty is an individual in whom another has placed the utmost trust and confidence. Utmost trust and confidence to manage and protect property or money. The real relationship wherein one person has an obligation to act for another's benefit, right? All of the fiduciary actions are performed for the advantage of the beneficiary, right? If we are talking of a director, he is acting on behalf of a beneficiary. Who is the beneficiary? His principal. Who is his principal? You are a director. Shareholders. You are being appointed by the shareholders. Shareholders are the principal. Director is the agent. And director, does he have a fiduciary duty towards the shareholder? Fiduciary duty, it is completely in the interest of the shareholders, not in the interest of the company. Right? There are case law that supports and says directors' fiduciary duty. Directors do not normally owe a fiduciary duty towards the individual shareholders. That's a statement under Percival versus Wright and Scottish Cooperative Society. These cases will support that, where it says there's no fiduciary duty on the directors to protect the shareholders all the time. Right? They need not act in the interest of the shareholders, that is the principal, in all cases. So that is what it is said. So then section 187, act in good. Directors have to act in good faith in the interest of the company. Act in good faith and in the interest of the company. Wholly owned subsidiary of another company, then act in the interest of the holding company. Here it comes. The question that I asked earlier, section 187 says directors have to act in good faith and in the interest of the company. If it's a wholly owned subsidiary of another company, then act in the interest of the holding company. That ABC and XYZ example, how it comes is from section 187. Section 188, to comply with Act and Articles of Association. Right? To comply with Act and Articles of Association. Right? If not complied with that, these transactions will be ultra vires. Section 189, standard of care and skill shall not act in a manner which is reckless or grossly negligent, and shall exercise degree of skill and care that may reasonably be expected of a person of his knowledge and experience. There were multiple cases in the courts that challenge the standard of care expected from directors. So all these cases were filed under, most of them, Section 189 of the Companies Act. Even the previous Companies Act had this provision there. Section 109, use of 190, use of information and advice. A director of a company may rely on reports. Now, this is where you as the accountant, you as the auditors in your companies need to be mindful, right? A director of a company may rely on reports, statements, and financial data and other information if and only if the director acts in good faith, B, makes proper inquiry where the need for inquiry is required, has no knowledge that such reliance is unwarranted, right? So as the accountant, you will be submitting set of management accounts for the board. All the board of directors are responsible for under Section 189. They can always get out of that responsibility by saying, your CFO, right, your head of finance gave me this report. I had no way of distrust in this. So based on that, we went ahead and did this transaction. So whatever information that you submit to the board, you have to be extremely careful that the directors can escape by saying the CFO submitted this information, which is wrong. I didn't know. I asked twice, but they confirmed that it is this information is right. So therefore, I relied upon it and I took this decision and went ahead with that. And as a result, the company collapsed. Okay, then the responsibility, their responsibility goes out. You come in as the person who gave wrong information, misleading directors. Okay, understand? So you as a KMP, key management personnel, right? There are multiple regulations that come and make you hold responsible for that. Key management personnel, you have misdirected the directors. So therefore, directors have taken these decisions and the company collapsed because of that. Understand your responsibilities under corporate governance, right? You may not be a director now, but you will eventually go there. But as it is now, you're holding a key management responsibility as CFO, as Chief Internal Auditor, as Chief Operating Officer, right? As the CEO of a company, as the Managing Director, right? All these responsibilities you have to be mindful. Otherwise, the ball will come back to you, right? Section 197, a director of a company shall not disclose information to any person or make use of or act in information except for the purpose of company as required by law, authorized to do so by the board, in any other circumstance in which you have to give that information, right? Any question up to now? No. Director's interest in contracts. Now, this is also very, very sensitive few sections in the Companies Act. Director's interest in contracts. 991. Director of a company is interested in a transaction to which the company is a party if and only if the director, right? What does that mean? In simple terms, what does that say? Director of a company is interested in a transaction. to which the company is a party. What does that mean in your terms? You mentioned 5 committees, right? Which committee is getting dragged in here? There are 5 committees. Nomination committee, remuneration committee, audit committee. Which committee? Are you all with me? No one can answer?
Humanization committee.
Huh? Come again?
Humanization committee.
I can do that. Which committee you said? Is it a difficult question? I don't think you all have gone through your notes. Right? Now, this is a related party transactions committee, RPT. Right? The director of a company is interested in a transaction to which the company is a party if and only if the director is a party to a or will or may derive a material financial benefit. Right? Say for example, I am on the board of ABC company, Niroshana Seniviratna. Right? Now, they want to outsource the payroll management of this company to a company. Right? That company, I have a financial interest in that company. Can the ABC company give that business to that company? You understand the question?
No.
So, your answer is no. I am Niroshana Seniviratna on the board of XYZ company, where they are now negotiating, in the sense discussing at the board, that we will outsource this work to PQR company, where Niroshana Seniviratna is having an interest in. I have a financial interest in that because I have invested in PQR company even before. Right? So, according to you, XYZ company should not give that business to PQR company. Even again?
No, we can give, but we have to disclose that.
We have to disclose. Right. Now, there are few things that we need to. You're right. Your answer is absolutely right. We can give, but we need to disclose. At the same time, when the decision is made, right, when the discussion is happening, I should not be in the boardroom. These are the committee management requirements. I have to excuse and say, excuse me, right? Please excuse me. I have a material interest in that PQR company. So therefore, I want you all to take this decision and also minute that I was not in this room when this matter was discussed. Understand? These are the committee management. The secretary of the committee need to, board secretary need to minute that and say that at the time of discussing this decision, Mr. So-and-so was not in the meeting room. Then he will exit After that, when you go to a different agenda item, you can call that person in. These are the practices that corporate governance in organization, how it happens. Right? So answer is absolutely right. Duty to disclose the interest of the, now see, the duty comes from section 192. Duty to disclose the interest of a director in a transaction forthwith after becoming aware of the fact that he is interested in a transaction, a general notice entered in interest register or disclosed at the board. Okay. So these are very, very sensitive and important, but under corporate governance, most of the studies, they don't discuss this. These are very, very critical to manage directors in practical sense. Who is a Companies Act shares, who explains who is a shareholder, what is their liability. Right? This is also very, very important under corporate governance. You need to understand the legal background. Otherwise, corporate governance is just having a committee, this number of members, non-executive, executive directors, all those will come in. But you need to really understand what is the responsibility of the shareholders, what is the responsibility of the directors, their liabilities, all that comes from the Companies Act. Right. The shareholder shall not be liable for any act, default, or obligation of the company. Now, he is the shareholder, right? If a company defaults something, shareholders will not be liable. Why? Company is a separate legal entity. That is given by Section 87 of the Companies Act. Section 90, powers reserved to the shareholders of a company by this act may be exercised only. Shareholder can exercise his liability or the responsibility, A, at a meeting of the shareholders, or B, by a resolution in lieu of a meeting. So he can't just walk into companies, shareholders cannot walk into companies and say that I'm a shareholder, I want to get involved with these discussions at the boardroom. No way. Okay. Shareholders can exercise their rights at an annual general meeting or a special meeting or by a resolution. Understand? Unless otherwise provided by the Act or in the articles of the company, a power reserved to shareholders may be exercised by an ordinary resolution. That is also possible. Right. 92. This is very important. Notwithstanding anything to the contrary, contained in the articles of a company, when shareholders exercise a power to alter the company's article. These 5 areas, very, very important. Okay. If they want to alter the company's articles, very critical one. Approve a major transaction. There's a definition for major transaction. Number 3, Section 185 says that approve an amalgamation. D, reduce the company's share capital. Resolve the company be wound up. Change the name of the company. Change the status of the company. It's a private company now. It can be changed to a public company. It's a public company now. It can be changed to a private company. All those, right? Such powers shall be exercised by a special resolution. Ordinary resolution is not going to work. It has to be a special resolution. Right. So this is our code of best practice issued by the Institute of Chartered Accountants. Revised one is issued in 2023 and revised guidelines issued by the companies, banking directions that applies to banks, all the banks. So this principal code, right? Earlier I discussed about the legal framework. Now it's about the code. Code requires certain areas. I think there are 9 areas. It goes into detail, right? Directors, then the directors' remuneration, relations with the shareholders, accountability and audit, then institutional investors, other investors, and Internet of Things, IT management part, right? Who are the board of directors, chairman, and the executive? I think these you all have discussed enough under your theoretical exercises. You want me to cover those areas? I don't think. The directors, first section, that section is handled by nominations committee, right? Section B, remuneration area, is handled by remunerations committee, right? Section D, right? There are 2-3 things that are coming there, right? Accountability and audit, the integrated risk management committee, related party transactions committee, and the audit committee will come there. So this is how your organization's minimum requirements come in. So you need to have a nominations committee, you need to have a remunerations committee, you need to have an audit committee, you need to have a related party transactions committee, you need to have integrated risk management committee. Okay? Right. These are the main board and the subcommittees that are required to be maintained. Now, before we go in, can you tell me who should be in the board nomination committee? Only board of directors? Management and board of directors? Management only. 3 answers, A, B, C. Who should be in the nomination committee? Only board of directors? Number 2, management and board of directors? Number 3, management, the top management.
Number 1.
Number 1, only directors.
Yes.
Right, very good. So there are no, this is a subcommittee. All these are subcommittees of the board. The example that I took at HNB, we have 13 members. Those 13 members, 3 of them will go into nomination committee. Another 4 of them will go into HR committee. Board audit committee, another 4 or 5 will be there, right? It could be a mix of members depending on the responsibility. And this is, all these committees are comprising of board of directors only. Clear, no?
Yes, sir.
Right. So, so these are the A, B, C, D up to H that you saw. Important ones I have highlighted here, right? So there are 2 key tasks of the top of every public company: conducting of the business of the board and facilitating executive responsibilities of the management. So you can read through those. I think you have already thought about that, and I will move into committees, how we really, in practice, how we manage committees. Is that all right? You want me to explain?
I think we are okay with that, sir.
Okay with that, right? These are the just guidelines that you see. in the corporate governance code. Okay. Now, this is also very important. That is Smith report. There are multiple reports: Cadbury report, Greenberry report, right? Turnbull report, right? Smith report, Turnbull report, all that. So the Smith report talks about audit committee alone. These are the recommendations given by the Smith report, or are being captured in the corporate governance code. What are these? This committee to have a clear terms of reference. So audit committee charter has to be there, right? The audit committees are made up of non-executive directors, at least one of which should have recent relevant financial experience. So first point is you need to have this. We are talking of audit committee only. In the audit committee, you need to have a audit committee charter or a terms of reference. What does the audit committee charter cover? Anybody? Audit committee charter or terms of reference for audit committee. That's the guideline. What does that cover in broader line? No idea? Look, දැන් නැත්තම් ගන්න again. මතක නැද්ද? දන්නේ නැද්ද? Can't remember? Question is, what should include in the audit committee charter?
It describes the committee's purpose
Very good.
and what are the responsibilities.
Very good. Duties,
Duty. Yeah.
authority, quorum, right? How it should be conducted, who is the chairman, right? When the chairman is absent, who can come, right? And who can attend these meetings, all that is being set at very high level. That is the audit committee charter. Thank you very much for the answer. Then audit committees are made up of non-executive directors that you all have discussed enough, at least one of which have to be having accounting background, right? Or masters in accounting, right? The audit committee should meet at least 3 times per year. These are the recommendations given by Smith, right? If I apply that to our bank, right, we have a number one, we have a terms of reference. I will show you if it permits, right? Audit committees are made up of non-executive directors. We have all non-executive directors. We have 5 members, right? We have very senior chartered accountants, right? 2 former CEOs of domestic systemically important banks, SDIBs we call it. So 2 retired ex-CEOs, one came from Commercial Bank, other one came from Sampath Bank. They are also part of the audit committee, very strong audit committee. Then one other corporate lawyer coming from John Keels is also in our committee. So we have a 5-member audit committee. All 5 are non-executive directors, right? We have 2 chartered accountants. One of these chartered accountants is heading as the chairman of the audit committee. Then we have 2 retired managing directors of 2 big banks in the country, and also 1 corporate lawyer. So that is the composition of our board audit committee. The minimum requirement number 3, the audit committee should meet at least 3 times. For the last so many years, we have been meeting at least 9 times a year, right? Basically, we are having audit committee meeting every month, like except for few months, right? So I act as the secretary to the audit committee in my capacity as the chief internal auditor. If I am not taking that responsibility, the company secretary, the board secretary should take responsibility for that. For the last 11 years, I was acting as the secretary of the board audit committee. Audit committee. At least once a year, have a meeting with the auditors without the presence of any executive director, right, or the management. So we have 2 meetings every year, first half and the second half. These are independent discussions with the chief internal auditor, that is myself. The board of directors, the 5 members, will have an interview with me and ask me whether there are any undue pressure on myself, whether I'm happy with what are my resources, whether I'm happy with my team, whether I have been adequately trained, right? All those will be asked from me. Same way, the engagement partner of the external auditors, that is KPMG as it is now, they will be having a separate chat. That again, I am also not part of the discussion. Though I am the secretary, I will walk out of the room when they are having that chat with the partner of the KPMG. Then immediately after that, they will be calling the CFO and asking again the similar questions. That again, I am outside that meeting. That is the corporate governance practices that allows that person to talk freely and explain things to the independent board members. So that is what is required here. Review of the financial statements and any interim reports, that is the responsibilities board audit committee. Now, as a bank, we have to publish, as a publicly listed bank, we have to publish our financials every quarter, right? Those financials will be presented to the board audit committee first. Then once they recommend, this recommendation is to the main board to adopt these financial statements before it goes for publication. So it's a very, very sensitive thing because it is market sensitive. Our profitabilities, our strength, everything is being discussed or disclosed in the Colombo Stock Exchange. So therefore, it's a very, very critical and sensitive, market sensitive information. Now, this is where the CSE rules comes in and links everything into one area where these are the practical things, right? Now, who will be privy to these information, right? Say, for example, your quarterly finance. So, first quarter is 31st March, January to March. First quarter is 31st March. 31st March financials need to be published. By when? 31st March financials need to be published when? No one knows? I think there are CFOs here, no? No one knows when to publish your quarterly financials.
Within 45 days.
Within 45 days, you are right, right? So 31st March, then April, May, before May 15th, we have to publish those. Now, when the finalized financials come in, right, this will be privy to board members, the 5 board members, managing director, CFO, and the secretary only. Okay, so sensitive information. If it goes into the market, right? These 5 members, MD, CFO, and the secretary, right, myself, will be responsible for that. Responsible for what? For insider dealing. What is insider dealing? All of you all know. Okay? You know what is it? Insider dealing, right? Time again. Right, I assume you all know. Right. Then what is forerunning? There's another term that comes in. Who are the forerunners? I assume you all know. Right. Review of the financial statements and any unitary reports produced, their board of directors are responsible. I'm talking of audit committee. Review of the company's system of internal controls. They are responsible to review the company's internal control system. Okay. Discussion with the auditors about any significant matters that arose on the audits. So they need to discuss audit and financial matters. Review of the internal audit programs and significant findings of the internal auditors. Right. So we submit the annual internal audit plan for next year. Right. They will review that and they will say, okay, you add, everything is okay, but you add these 5 areas. So we have to add because we are working for them. Right. Once it is approved, we will be performing and giving an update on the progress of our audits. Right. So that is given every month to the board audit committee. All our reports are being submitted to the board of directors or board audit committee. They will be going through and asking questions, and also they have the right to call the management who are responsible. Based on our reports, we have given recommendations, but the management is not accepting the recommendations. So all these matters will be discussed and they will be calling the management and asking explanations from them why they have not done that. Yeah. Recommendations on the appointment and approval or removal of the auditors. Now, it's a Banking Act requirement that every 5 years we have to change our external auditor. Right? So for the last 5 years, external auditors were KPMG. Now this is the final year that the KPMG is doing the bank HNB's audit. Now we have to appoint another auditor. Right? Their term is over now. Okay. After this 31st December, their term is over. Now we have to identify auditors. That again, the current regulation is that there are 5 firms approved by central bank to get the financial statements audited by these companies, right? The banks, especially the banks, and we being a systemically important bank, right? How many systemically important banks? There are 5 systemically important banks: Bank of Ceylon, People's Bank, HNB, Commercial, and Sampath Bank. Right? These are the regulation around that is extremely strict, and central bank is very, very closely monitoring all these banks, and specifically the corporate governance practices in these banks. Right? So the maintaining of minutes, what we discuss, decisions taken, right, adherence to the requirements, all that of the audit committees, and also nomination committee, related party transactions committee, risk committee, and remuneration committees. All these sensitive committees are required by law, and the secretaries are responsible for maintaining of those data, and also the attendance, who attended when, all that need to be maintained. So how it practically happens: appointment of the directors to the subcommittees by the nominations committee, right? And secretary is informed of the appointments. So they will say, these are the 5 members that have been appointed to run the audit committee. These are the 3 members that will be assigned to run the nominations committee. Like that, they will be informed to the respective secretaries. Audit committee consists of non-executive directors. This I explained. 2 senior chartered accountants, 2 ex-CEOs of DSIBs, 1 senior corporate lawyer. So very, very high-end, very, very knowledgeable set of individuals who will be managing this for the bank. Year plan is prepared by the secretary. I myself prepare it, and meetings are scheduled. We had 9 meetings for the last year. This year also we have done about 7 meetings, another 2 meetings to go. Action document tracker is prepared by the secretary covering. This is a very important document that I introduced. Don't know whether it will open. Can you see this document, Excel?
Yes, sir, it is visible.
Right. So this is a tracker that I have prepared, right? On the left side, the areas, the requirements for the board audit committee to comply with. There are certain requirements coming from CSC, certain documents coming from corporate governance code, certain coming from the Companies Act, certain coming from the CBSL, right? Like that, these are the requirements. And the responsible party. Some CFO is responsible, some CIA is responsible, right? Secretary is responsible, like that. Then other columns, 1, 2, 3, 4, 5, these are the months. January meeting, February meeting, March meeting, like that, right? So I have populated that to say that when we have the November meeting, these are the things that we need to really take up. If you miss that November meeting, we will not be complying with that requirement, right? So this X marks at which meeting, what should I take? So when I'm preparing the agenda for the meeting, I need to basically include these X marks in that and prepare my agenda. Is it clear? So if you happen to be that, I think I'm suggesting that you all should follow something like that. Otherwise, if you miss any of these, the secretary of the board audit committee will be responsible. Right. Then I prepare an agenda based on that. So my agenda will actually look like this. Right. So this is the latest agenda. When is this? 10th September 2025. This is the agenda that we discussed. So I sign and send it to them. And this is how it is done. Then papers for discussion and uploaded to a system. We don't share, we don't email. We have a system for the board members to access. We share only in that system, right? Then once the meeting is going on, I take notes of that. These are called the minutes. Minutes have to be perfectly. So these are the minutes of 25th June 2025 meeting, right? These are the attendees. These are the attendees. So these are the ones that we discussed at this committee. Okay. These are confidential information, cannot be shared. Right. Minutes. Minutes get ratified at the next meeting. This minute, when I keep a track of it and I write down and share with them, this will be ratified at the next meeting. Minutes are uploaded to the main board. After ratification, these minutes of the subcommittee, the board subcommittee, will be uploaded to the main committee for the information and the decisions that were taken. Right. Then also I prepare an action tracker that is to track the actions that the meeting proposed. So CFO will come and the board will say, CFO, you have to do these reconciliations. Make sure that you do reconcile your suspense accounts. So I track it and inform, right? This is action tracker. I track it. Yeah, one item for CFO, right? Right. So that person has to do that by February 2026. That is the action requirement, right? Action tracker. Attendance of the meetings need to be kept, right? So that is where the responsibility is for the secretary of that and the board audit committee's responsibility. Very, very similar practice for board nomination committee, board remuneration committee, related party transactions, and the risk committee, right? Now, chief internal auditor report directly to the board audit committee. External auditors are also directly reporting to the board audit committee. We have the chief risk officer. Chief risk officer is reporting to the board subcommittee on risk. Chief compliance officer is also reporting directly to the risk committee, right? So under corporate governance for banks, there are three critical roles. There are three critical roles in the bank. One is the chief internal auditor, chief risk officer, and chief compliance officer, right? So it's a requirement that these positions are held by a qualified people, and they have they have adequate experience in doing that. So they will be reporting to the chief internal auditor will report to board audit committee. Other two will be reporting to board risk committee. And the act is so strong that it says that these people need to be at this level in the bank, right? They have to be at the second layer of the bank. If the first layer is MD CEO, then these positions have to be at the deputy general manager positions. So if you are specializing in any of these lines, automatically if you join a bank, right, your position will be a deputy general manager at the highest level of the bank. Okay, so these are the pillars, three pillars that the entire corporate governance work on, and the responsibilities are also huge. If something happens, these are the three guys who will be giving their neck first in the line. Okay, right. So having done all those, having held those meetings, minutes, attendance records, all that, at the end of the year, there is a corporate governance requirement that this needs to be published in the annual report of your organization, right? So that is why you have very, very bulky annual reports. I think some of you all, if you all are chartered accountants, you may be part of the annual report evaluation teams. So there are corporate governance requirements, sustainability requirements, right? Companies Act requirements, everything comes in, and that's a huge annual report that we'll publish, and the adequacy of publishing, adequacy of coverage in those reports. So in the annual report, if I talk about the board audit committee, board audit committee report will be published like this. This is the latest, 2024. Mr. Devaka Kure is the chairman of the board audit committee, very, very senior chartered accountant who had been at Ernst & Young and retired after 40 years. Is the person, composition and meetings. Composition is given, chairman is two, other members' names are there. Independent directors, regular attendees by invitation, and the secretary. My name is here. What are the things that they covered during the year? Many areas they have disclosed that. Audit committee charter, they have given a separate chapter explaining what is there in the audit committee chart. Key responsibilities of the committee members, then authority of the committee members, activities for 2024, what they have done. The attendance, right? Mr. Devakure, there were 10 meetings that we have held in 2024. He has attended all 10 meetings, right? 10 meetings, 7. They were appointed lately. That is the reason. External auditors, it's a 3-page, 4-page report that they submit, and the board audit committee chairman at the end signs that report. So any annual report, any organization's public companies annual report, you will find these reports. Similarly, you will have nomination committee also. Mr. Devakure is heading the nominations committee because he has a lot of experience in that. He's heading that committee as well. So that again, he's giving a scope of that committee, nominations committee. And he's also signing at the end. This is the nominations and governance committee. Then the remunerations committee is Madhu Ratnak is heading that. So he has given the very, very similar explanation of what their terms of reference, what they covered during the year, and so on and so forth. Then we have the Related Party Transactions Committee, headed by Mr. Rashida Gunawardhan, one of the CEOs, former CEOs of People's Bank. He is also giving a report like that. These are critical reports. And Integrated Risk Committee, headed by another senior chartered accountant, Mr. Remo Saldin. Right, he's also giving the coverage of that. Right. Then we have the board committees. We have the terms of reference. This is the terms of reference. These are the terms of reference. Right. Definitions, everything given. Scope of the audit committee is given. Composition of the audit committee is given. Powers and authority, duties and responsibilities. Internal audit oversight and responsibilities. Proceedings, how they should conduct proceedings. Orientation and development of the committee members. If a member comes, joins new, we need to give inductions and all that. Frequency of meetings, disclosure on the committee's activities, so on and so forth. Everything is covered in that audit committee charter. Then with regard to external auditors opinion is published in the annual report. KPMG did the last audit, so they have given this opinion published in the annual report. Then in terms of the internal audit coverage, we have internal audit chart, very similar to the terms of reference of the board audit committee. We have an internal audit charter where our authority is coming from, right? We specifically say role of the internal auditor, authority, scope of the activities that we cover, then resources, independence of the auditor, responsibilities of the auditor, internal audit responsibilities of the management. This is very, very important, where they have to respond and give access to information is unrestricted, audit plan and the programs, procedure and reporting, all that is being covered in that. This is our protocol, what I would say, where we will be guided by that. So internal audit plan, internal audit branch visits, all that is there in that line. Right. If you take, if you go to our website, you can find the annual report of HNB, where under corporate governance, there is a, how many pages? I don't know, big document that we publish. What is corporate governance? What are the requirements? Board highlights, then the board of directors who are heading what, right? Go there and read if you are interested. I will show you how it is presented. Huge document. The board attendance of meetings, board meetings, right? Mr. Nihal Jayawardene is our chairman. There were 19 board meetings. He had attended 19, all 19 of them. He is not a part of board audit committee, so it's blank here. But if you take Mr. Devaka Kure here, he has attended 10 out of 10 of the board committees and also 19 out of 19 board meetings, right? This is how their responsibilities. Because earlier practices, if you take Enron, WorldCom, all these practices, they were in the board, but they have never attended. Some of the board members have never attended board meetings. Our parliament is also like that. Some of the members have not attended parliaments on a continuous basis. This is the part that I want to show, right? Compliance with Banking Act directions and regulations, right? These are the regulations. If you are complied, we'll be putting as a complied tick. All ticks. If there is a X here, then we have to explain why it is. So we have gone another step and saying, this is the requirement. We have complied and we are explaining how we have complied. This is not a requirement. If it is complied, you have to say complied, no explanation required. If you have not complied, you need to explain why it is not complied. Okay? Right. So that's about corporate governance, but there's one more within 10 minutes I will show you, because otherwise, if I share that, you will not understand what it is. Listing rules. Right. Now, this is very important. Listing rules by CSC. You need to understand how it works. I will share this document also. This explains what are the requirements. There are very, very sensitive areas. These are the key aspects. Listing rules, section 9, corporate governance. These are all important sections in the listing rules that gives direction. These are mandatory compliance requirements. Applicability of the corporate governance rules. 9.1 says all entities which have listed its shares or debt securities, then they have this corporate governance rules will apply. Policies. This is a new requirement that came in. Listed entities shall establish and maintain the following policies. Now we have to have these 12 policies, right? Specifically, they have said you need to have these policies. Not only that, you need to publish these policies in your website. Policy on the matters relating to board of directors, policy on board committees, policy on corporate governance, nominations, re-election, policy on remuneration, like that. Whistleblowing policy, anti-bribery and corruption policy, those need to be published by all the listed companies on stock exchange. Board committees. They have to talk about the board committees. These are the minimum as per CSC rules. Nomination committee, remuneration committee, audit committee, related party transaction committee. This committee is not here, right? Policies on matters relating to the board of directors, right? all that need to be covered. Listed entities shall have a policy on effective communication and relations with shareholders and directors. Now, again, principal and agent, right? Shareholders are the principal, directors are the agents. The moment they come on board, they forget who the principal is. Okay, so therefore, under corporate governance, they have specifically mentioned that the board of directors should continuously talk to their agents or principals, right? Like that, there are multiple guidelines that you need to. I will share this document. When you read, you will understand. So our time is up. Anything that you want to clarify? I will stop at that. If you want to clarify anything, just ask questions. No questions? Shall I ask you questions? Can you answer this question?
Of directors.
Huh?
Board of directors.
Board of
Board
directors.
of
Very
directors.
good. Right. This one? True or false?
False.
False. Why?
They are not the public limited company.
Very good. Second question.
Also false. Sorry.
Why?
Non-independent. It should be non-independent, non-executive director.
Very good. This one?
It's true.
True?
Yes.
Why?
Because
that is not. Because nowhere it says audit experience. At least one of the audit committee members should have recent relevant accounting qualifications. Not auditor.
Oh, okay, got it.
False. Be mindful at the exam. Audit committee should meet at least 3 times per annum.
True, sir.
True. Yeah, it's true. Next one. True. Next one.
True, sir.
Right. Next one. What's the answer?
False.
Why false?
Good advice.
Not responsible. No, for the risk.
Risk. Okay.
Risk management activities.
Yeah. Okay. False. Audit committee should directly report to the board of directors.
Yes.
Right. Role and responsibilities of the audit committee are set out in the statute. In the act.
Yes.
Yes.
Yeah. Where there is no internal audit function, the audit committee should consider the need for that, and I can't see it. Right. Right. So we'll stop at that. So overall, I think you'll are capable of answering all that questions. Now, these will not come as your at the examination, right? So go through. I will share my slides and also a few handouts for you to revise. So thank you very much. And all the when is the exam?
Mid exam is on 15th November.
15th November, right. I have another session, I think, before that. So all the very best, and thank you very much for your active participation.
Thank you,
Thank
sir.
you.
Thank you, sir. This
sir.
is very valuable session, sir. Thank you.
Right,
Thank you so much.
right, right. Thank
Thank
you.
you.
sir.